would be how to get clients to make money. But now you've made money, so we have to talk about that, whether you've made it or not. So how's the learning been going so far in Ignite? What have you guys liked, not liked?
That's so good. I love to learn.
Good. Yeah, the hardest part about all of this learning at Keller Williams is moving past the learning and just do the doing, because you could become a full-time student and just learn and learn and learn, where if you just do that, you'll never make any money. So don't do that. Stop. Okay, got it. So let's jump into it. So you guys have grown your business. We're running the business, and we're doing the very last thing, but probably the most important about running a business. We are managing money. Do you guys remember this section when you got licensed? About how they taught you how to sell real estate and then manage your money? Or maybe you remember it from high school where they taught you how to manage money. I remember the only thing that we did in like this money management class is I learned how to write a check, which was fun. We like wrote fake checks. And then we also learned how to like address mailers, because I guess that was like a weird thing. Like you got to mail checks. And then the other thing is we did a stock market game. And I actually took third place in my school because I forgot to invest money and everyone else lost money. So I'm like, I'm great with money. This is a thing I do now. It's like, what do I buy? And I had the worst thinking. I was like, what do I buy? Like, who cares about the business? I'm like, I'm all about Wendy's, McDonald's, Little Caesars. Let's do those. Okay. So we kind of joked about it, but no one really teaches about money. Like that's not a thing. In Keller Williams system, that is a huge thing. Have you guys listened to the podcast, Think Like a CEO? They literally have like a whole season about money, which is awesome. If you're not listening to it, Think Like a CEO, it's Gary Keller, Jay Papasan. It's amazing. So do it. So habits for a financially sound business. We're going to dive into a bunch of these. I might take things a little different than some people, and we might not follow the book all the way, but we will get all of the content, and then I'll teach you everything that you should be doing. Because like I said, this is my favorite subject. So I literally read books about how to do this and attend classes and talk to people about this. So they have some habits here for you to follow, but they have some worries for people. Many agents confuse income with profit, right? You close a 10 grand transaction. It's even worse though. It's like, I have a client looking to buy a house and the commission should be 10 grand. And then you go and spend 10 grand, but you don't even have like a buyer broker or a under contract. But so, but they confuse income with profit. Don't save for taxes, or don't pay their taxes on time because they didn't save. Don't use the powerful tools available. Don't understand their financials and they're just kind of winging it. Don't plan for a regular monthly salary and aren't preparing for their financial security. Who's my nerds in the room? Who has like knows your net worth, does a budget, anything? Thanks for being the one nerd here. So Dave Ramsey, he says there's two types of people in this world. There's the nerds and the free spirits. The nerds are the ones that like all the numbers or are constantly tracking it, whatever way that is for them. Maybe it's a spreadsheet, maybe it's Mint, maybe it's literally just checking their bank balance every single day. They know about their money because they look at it, they're nerds. The other people are free spirits and they just kind of go with the flow, whatever they want. Like, I'm feeling like I have a lot of money, so I'm going to go buy a new laptop. I feel broke, so let's not go out to eat, kind of a thing. I am the nerd side. So I'm going to instill some nerd habits onto you. and set it up so it's easy for you to be a free spirit, but also a nerd at the same time. Money is good for the good that it can do. Does anyone have like deep-seated issues with money? I feel like this is one of the harder topics because from a very young age, we were programmed how to think about money, right? Where if you had a bunch of money, it's probably very different than the rest of us that grew up either poor or middle class. But a lot of people are like, there's like the scarcity mindset around money. There's like hoarding mentalities. There's all of these bad things that we do with money, and it's because of how we learned there. One of those mentalities that people have is that money is evil, right? Money is the root of all evil. You probably heard this, but it's not. Money is good for the good that it can do. Like, think of how many charities go out and do crazy awesome things to the world because there's money. So if you have a small belief that money is bad, take that away. What's the purpose of business? Make money. It's like an easy answer, right? Because we already talked about money. So that's like 90. Yeah, it's about profit. And businesses nowadays don't get this because their whole goal is to just get customers. Like DoorDash, who uses DoorDash? Who spends way too much money on DoorDash? None of you? They don't make money. It's something like $1.31 or something. Every time that you order DoorDash, they are losing $1.31. Crazy, right? They're not in the business to make profit. Supposedly they're going to one day. I don't see it. So today we're going to set you up with financially sound business practices. So this is how most people probably think of commission over here. So you go sell a house, you get $9 grand commission, and there's splits and blah, blah, blah. Ooh. Ooh. Splits, that's what got me right there. Yeah, there's splits and things. You end up getting a check. I like that they named this agent Jessica Campbell because I know a Jessica Campbell, and she is one of the people that I dislike so much that I would never work with her. She like used and abused me. She's like, hey, yeah, we want to sell our house. What do you want? What do you think that we should sell our house for? And what's your marketing plan? And then they turned around and fizboed it and did everything that I just told them that I would do, just not as good. And I think they didn't get enough money. And then they were going to go buy a house. And my team literally represented the builder that she wanted to go build with. So I called up the builder and I was like, hey, model agent, like register her as my client. And then they went under contract, then found out I was going to get paid, and then canceled the deal and moved somewhere else. So Jessica Campbell's bad with money over here, and I'm happy about that. Okay, so most people, they get a check, whatever the splits are, it comes out, and then that goes right into their personal bank account, which is also equivalent to your wallet. And there's no savings and there's no tax savings. This is how almost everyone lives. So don't feel bad if this is you right now, because we're going to change that. We're going to set it all up. How it should go is when you get it, it goes into a business bank account. Some of it will go into your personal, some will go into tax savings, some ends up in your wallet, other ends up savings for taxes. Here's why people don't do this when it makes so much sense. Because in this scenario, she had fit over $5 grand in her wallet. Like, what can you go buy with $5 grand right now? You could almost live for a month, probably. Most people's budgets are like that. Here's Jessica's wallet in this option, like $2,400. So when you look at just what you have in your pocket, which is better? Doing this. When it comes tax season, which is better? This one. When you have a business expense, this is better. This is better for every scenario. You just feel poor. But really, that's my secret on how I save money, is I just make myself feel poor all the time. I hide money, even from myself, all over the place.
So last year was my first really big year, full year, I guess. And I did okay, but we just set that money aside pretty much. And my husband started back at a W-2 job on 1st of January so that we could get And when they did that, because he had worked there before, and so they had changed the program in between the time.
Mhm.
And so when we went back on, they're just like, yeah, everything will be fine. You don't need to do anything. We just like turned the system back on. We're like, okay, cool. So me being dumb didn't go in and like double check everything to make sure that it was all correct. So they pulled out $1,600 for federal taxes.
Ooh.
And so we have not paid hardly anything into our taxes last year. But I took everything that I made in real estate and just put it aside. We didn't use any of it. Thank goodness, because we're gonna owe taxes on that. And on our W-2 portions.
Oh my goodness.
Crazy.
But you have the money, so you're good.
We have
So you're
money,
not
so
living
we're
this.
good.
You don't
Yeah,
have
we're
the
not doing
savings.
that. But
You have
still, when I
this.
talked to my accountant CPA guy, I was like, I have to pay what in taxes? I wanna cry.
I know it's funny how like a tax refund feels so good. You're like, look at this free money I got. When really it's like, oh, you just paid too much to the government over the year. And so they're just going to give you some back. So like in theory, it would make sense not to pay the government anything and then write them a check at the end of the year. But that's harder than
Yeah, you.
overpaying and then getting a check back. Yeah. Yeah. That's why I hide money from myself, because it's like, you ever stick your hand in your pocket in a coat and you're like, hey, $20. I get that all the time. I'm like, wait, what's this email? Oh my goodness, I got $2,000 in a bank account that I forgot about. My profit share, it goes to an account that I never even check. And so randomly, like they'll put up like, hey, or I'll get the thing in the mail that's like, hey, you made $300 in profit share. And I'm like, oh, sweet. And then I forget about it. And then randomly I'm like, oh, I need a bunch of money for something. And I check that account and there's like $5,000 in it. I was like, oh, sweet. Profit share. Thank you. So we're going to set up something like this is the goal. And this is basically what we talked about. So the MREA models. So millionaire real estate agent, it is basically a model on how to live. Did you guys watch the Jay Papasan class on Monday? Gosh, it was so good. Changed my world. I don't even know why, but it did. Like it would like hit me.
So we were here
I
in
think we
class
were in
Monday.
this class.
Whatever it wasn't as good as Jay Papasan. I think they record it. Oh, is it Wednesday? Man, it feels so long ago. Wednesday. It was all about living models, right? Find a model because it takes you to a bigger place, right? So we're going to do that. So the model of finances, it's called the 30-30-40. So 30% cost of sale, 30% operating expense equals 40% profit. Right? That's what you should do. So when you, oh no, I'm getting COVID. Pretty sure I had it like 2 weeks ago. So if you ever hear of anyone say 30-30-40, that's what they mean. 30% cost of sales, 30% operation, and 40% net income. Can't remember how much we dive into what's what. Let's just do it now. What is a cost of sale? Who knows?
I would have said operating expenses was part of the cost of sale, but I guess that's not.
You gotta think back to accounting. Accounting 101. I know Jessica knows that. She's got a little smirk in the back there.
I mean, I would assume it's just like all the marketing and listing.
Have you ever heard of anyone that's like something bad happens and they like lose some money and they're like, oh, that's just the cost of doing business,
Yes.
right? Think of it that same way. It's the cost of selling something. So you only incur this cost if you sell something. So let's talk about like E&O insurance. How much do you pay every month for E&O insurance? No, it's a trick question. You don't pay it at all unless you close. Every month it's zero,
Okay,
but when you close a transaction, it's $25
not per transaction, but.
per transaction.
Okay.
Per transaction. How much do you split with your team? 50%. So if you don't close a deal, how much do you pay your team? Zero. If you close a deal, you pay 50% of whatever the commission is. Those are costs of sales. It only happens if you make a sale. Operating expense is everything else that you spend money on, right? Your KW Tech fee that you have, spend money on that. You need to go renew your license, you spend money on that. You go buy a lunch for a business expense, you spend money on that, all operating expenses. So your cost of sales should be 30%. Whose is 30% in this room? What's your split with your team? So what's your cost of sale? 50. So we're already doing bad in this 30, 30, 40, right? So I think the important number here to remember is the 40%. We want to hit 40% profitability. So if we're at a 50% cost of sale, what should our expenses be? 10. So because you're on a 50-50 split, you have 10% of your income that you can pay towards expenses. And then that leaves 40% profitability. And then you should pay taxes on that profit. Kind of an idea. There's a whole bunch of tax things. So maybe you'll spend more money that you won't really, and things like that. We're not going to get too much into that. There's other classes on that. We might, if you guys have questions, we can kind of chat on it. But yeah, so you should spend less because you're on a team, right? You don't have to pay for most of your marketing. You don't have to pay for events and all of these crazy things. You're probably not paying an assistant because you're on a team. So this being higher and this being lower is completely fine. So in my mind, the model should be 40. How do you get 40% profitability? I don't care your other numbers. I want to make 40%. Do you guys know what Walmart is? Their profitability percentage? 3%. Most businesses are under 10%. So if you were to like go to a CEO of some big corporation and be like, I have a 40% profit rate, you know what they would do? They'd be,
I think like a grocery store is like one.
yeah, it's ridiculous. Yep. Yeah, it's crazy. How, I don't even know how they live on that, but you're getting 40% profitability on decent sized transactions. So you have to do fewer, where a grocery store, I mean, if they get 1% on everything you buy, like think how many things you scan and how many people go to the grocery store. So it kind of makes sense, but we have a better profit margin, which is great. So let's talk about the flow of money, right? You make money, you spend money, what's left is your profit, right? Wrong. Well, this is right, but what we're going to think is we're going to think, what do we want to make? And so then how many homes do I have to sell? And then how much can I spend to make sure that I hit my profit? We're just kind of flipping the whole goal on its head, right? You make money through listing, sales, referral, not leasing. By the way, referral income is the easiest way to make money in the entire world. If you know someone that lives in a different state, you should market to them just as much as you market to your sphere here, because you can just literally say, hey, I have a network of agents I'll set you up with if you're looking to buy or sell. And if they call you and you just reach out to an agent first, you can ask for a 25% referral fee. That is like industry average. We had an agent on our team make $25,000 in 1 month off of referral income. He had never made more than 20 grand in his life in a year. And so then he quit and moved to Price. I'm like, I think you need more than 25 grand. I mean, like, Price isn't that expensive, but 25 grand is not a lot of money. I don't know what he's doing anymore. Leasing income, we don't do that. So don't even worry about that. Cost of sale, we talked about this. So one thing is cap. And I just want to cover this very quickly. A lot of you are on the Transcend team, right? This is a little bit different. On the Transcend team, they pay your cap. What do they pay the 50%, even the Keller Williams International?
If you do a referral, I was told if I do a referral, then I do the 3%. 3% of that goes towards the
Okay.
because it's a referral, but everything else is 50. Of course,
Yeah.
Yes,
That's
after
right, it's
that, but
30
I
it's
think that they have to
36,
pay, I think they have to
64
pay
for
that
it.
6%.
I was going to ask Carl. Carl, are you listening?
I just did that yesterday with Molly.
Molly? Okay. Well, so how caps usually work, Transcend team is cool, is usually whatever your commission is, you're gonna take out your the split to the market center, which if you're not on a team, if you're just solo, it is 30%. So you go get a 10 grand commission check, you have to pay $3,000 to the market center. Then the other thing is the royalty, which this goes to Keller Williams International. This is 6%. Both of these do cap. And so in your 10 grand, what's that, $600? That seems so low. No one's a nerd except for Jessica, and she not listening. So, so you'd split with your team, you'd split with the market center, you'd split with the international, and whatever left is yours. Past the Transcend team, if you join a team, it's not 30%, it's 15%. So it's a half cap. Either way, this caps out. And so if you're a solo agent, it's $15,000. If you're on a team, it's $7,500 until you cap. And then there's a $3,000 international for both of those. So when you're a solo agent, the most that you could ever pay would be $33,000. As a team, nope, $18,000. 30%, $18,000 if you're all by yourself. If you're on a team, the most that you could ever pay is $10,500 plus E&O. And then when you're capped, whatever your commission check is yours. Boom, easy. Do you guys have questions on splits? It's kind of a confusing concept with splits and caps and everything. But one piece of advice, never be on a team just because they have a good split and that you get to like save $7,500. Be on a team because they add value. So Transcend adds value. They teach, they help, they get you going. And then after that, if you're going to be on a team, get value from the team. Don't just be on a team because you're like, it's $7,500 cheaper for me to be on a team. If you're not getting value from the team, it's probably better for you to get value from the market center and pay a full cap. But there's a lot of different teams adding a lot of different values, so that shouldn't be hard. Okay, so let's plan for your future. How much do you guys want to make this year? 100,000. Does that sound good? Okay. Wait, but let's think about it. Why do you want to make $100,000? What are you going to do if you make $100,000? This can be personal in your head. You can yell it out, whatever you want. Why would you make $100,000? What would that do for you?
Lets me live and have extra money for savings and charity work.
Nice. Live, savings, and charity. Do you know there's 4 ways to spend money? This is not in the class, but I always find it interesting that when you say that, most people are like can't even come up with 4 ways to spend money. But so you like spend it on stuff, mortgage, whatever. You can save it, you can give it away for charity, and then you can invest it in something. And then hopefully your investments pay you money, so then that comes in back into you and you don't have to earn as much with your job because you're earning money from your investments. Flow of money. Okay, so $100,000. Let's just make $100,000 because that's their example. Boom. Because everyone says 100,000, so that's what we're going to make. Your gross profit goal. So this is, you are going to save all of your money for taxes. So you are going to have $100,000 after taxes. And you're going to save a bunch of money for taxes because you're going to be bad at writing things off because you want to buy a house. So you're going to show a bunch of income. We're just going to go off of that. Has anyone ever had like a W-2 job that makes them $100,000? Like gets an offer like, we will pay you $100,000. Do you know how much you would probably actually get? Like, yeah, like in the 70, maybe 80,000 if you're lucky, but then you'd have to pay taxes. So having $100,000 after taxes is amazing. Like this is life-changing because you've already saved for taxes. So anyway, if we add in taxes, so we have to get $166,000. And then you're going to pay a bunch in taxes. Then we are getting a profit of 40%. So we're going to divide again by 40% to figure out the total GCI that we will need to earn. So if you make $400,000 GCI, roughly it rolls down to you getting that at a 40% profitability, right? Kind of makes sense. So then home sales, how many homes do you have to sell? Let's say that you get $7,500 commission for every house that you sell. We're closer to 9,500 right now in the brokerage. But they've already done the math at 7,500, so we're not gonna balk at that. You sell smaller houses, that's fine. 56 home sales. You have your cap that you pay, and you have your expenses. So you get to spend $125,000, and then you still take away $100,000 to you. I don't know, they did dumb numbers. So in this example, imagine this, because some of you might say 56 houses and that sounds ridiculous, right? You are spending $125,000 a year on other stuff. So like, imagine you have your license that you have to pay for. Let's get you a car, because you need a car to drive around. You're going to pay for gas and maintenance and all of that stuff. Let's say you need a phone, right? What else do you need? Computer. Yeah, might as well get a brand new computer every year. Your MLS dues. You're going to go to family reunion. You're going to get an office, maybe mega camp, do a whole bunch of other trainings. I think we just spent maybe $50,000. We still got 75 grand to spend. New clothes. Yeah, that might have to come out of here. I don't know if I can justify it as a business expense. Yeah. As I say, every time that I eat lunch, I talk about business, either with someone or, yeah. I come back to the office. So that's a business expense. When I take my wife out, you know what we talk about? Work. Yeah. I at least mention real estate. When I hang out with my friends and we like, hey, I'll buy us a bunch of pizza and we'll just hang out. You know what we talk about? Real estate, because they're all my clients. So this is like the coolest life ever, because you're going to write off a bunch of expenses in this that are legit expenses. It's not like we're like tricking the system or anything. We are spending 125,000 on business and making 100. So we could probably make 50 and live a great life. Right? So cut all these numbers in half and you're closing 25, 30 transactions and you're still living a great life, because all of our expenses that we're paying can come out for other things. So kind of a cool thing about the business that we're in, right? That 40% profit is really your money, and then everything else you can spend on stuff for you. Got a brand new computer this year? Business expense, boom, perfect. Okay, so best practices. I might jump all over the place with this one. First of all, I want to draw some pictures. Is anyone on Zoom? Okay, good. So there's a whole way to set up your entities, right? You are a business owner right now. You should probably have a business entity. By the way, it makes sense when you're going to make about $30,000 to $35,000 a year. It makes sense to do this. If you're going to make less than that, probably just become a sole proprietor, which is exactly what you are if you don't have a business. So when you get a check cut to you, if it comes to your name, you are a sole proprietor. If you get it cut to like an LLC or a business name, you are going to do what I'm going to show here. So drawing a wall here because there's two sides, right? You should have your business income right over there, which should come to an S Corp. Here's how you set up an S Corp. The easiest way is call your accountant and be like, hey, I need an S Corp, and they'll just do it for you. Otherwise, you set up an LLC and then you do an S election. The S means small business. So you're a small business corporation. So you're not like Google or Apple or anything, you're small. S Corp. Then on this other side, who owns rental properties? Who wants to own rental properties? Okay, so we have everyone here. When you do, or if you do, you should have an LLC over on this side. What should happen here? My COVID. When you get a check, it comes into your S Corp, and then you hang out down here. You spend all your business expenses and everything like that, and you will pay yourself 2 different ways that we can talk about down to you. I'll even put 2 arrows. Then you have your LLC. When your rental properties are making you money, you can pay yourself right here. Boom, so easy. If you want to take it a level up, you do a trust right here. So your trust owns everything. And that's how your money flows. So if you die, your trust owns your businesses and your rentals and everything like that. That's like steps down the road. I have a brother-in-law that this is what he does. Like, he's literally an attorney that does estate planning. I've asked him like 5 different times, like, hey, I want to set up a trust. I feel like I should do that. It's like, nah. I'm like, I'm trying to pay you to do your job. Like, this is weird. Like, I'm in real estate. If you're like, hey, I want to buy a rental property, like, I'm not going to stop calling you till you buy a rental property or you stop being my brother-in-law, kind of an idea. But he was just like, every time he's like, nah, well, you don't even know what my financial life looks like help me. But anyway, so if you start another business, anyone have a side business? Oh, you have a side business? Oh, yeah.
I do.
Coffee shop yet?
Not yet.
Okay.
Work on it.
So you would set up an LLC. Maybe that's owned by a bunch of different partners, right? She goes, gets a bunch of investors to put into her coffee shop and she's running things. So then that's one way that she's making money, down to her S Corp. Her S Corp owns her businesses. That's the future too. If you have a bunch of rental properties, you can have them all in the same LLC like this, or break them up into different LLCs like that. Easy, right? The whole thing is that's protection. So let's say that you do something really bad for one of your clients and you get sued. And Dean's like, yeah, you're screwed here. You're going to lose your license and they're going to come after you for all you're worth. You know what happens if you do that here? It should stay here. Depending on how you're doing things, they might be able to come down to you personally. That's a whole different story. But they're not going to be able to go over to your rental properties. If you do your rental properties in your personal, then they can come right over to your rental properties. If you have a rental property and someone slips and falls and gets hurt and sues you, it stays over there with the rental properties. If you divided them all like that in different LLCs, then they can only go after that one rental property. So you have a bunch of equity in one, they could only sue you. Your worst case scenario, you have to sell that property to pay all the damages, and then that LLC declares bankruptcy and is gone. But it stays right there. So super awesome. So that's the idea of how you should set up your world. This is very basic. If you've ever seen Johnny's, I think he calls it his empire org chart, something like that. This is what it is. It is an S Corp on one side and LLC on the other side, and then he has a bunch of fancy things going off of it. He has retirement accounts, self-directed HSAs, and all of these things. But this is the basics of it. Questions? Okay. So I mentioned that you can pay yourself 2 ways. You have to with an S Corp. You have to pay yourself a salary, and then I guess you don't have to pay yourself dividends, but you should. This is all for tax reasons, because you're taxed differently as you pay yourself with a business. So W-2 employees, right? When you get a check, they take out, should have been a 7, not a bracket. Ooh, okay, so they take out 7.5% from your paycheck, and then the business pays 7.5% on your behalf, right? That's the payroll tax system. When you're self-employed, do you know what they do? They take both of these. Yeah, and then you have to pay income tax and all these other taxes on top of it, but this is for like your payroll taxes. So when you have a W-2, if you make 10 grand a month, you don't actually get 10 grand a month, you get taxes taken out of it, and this is it. And your employer also doesn't just pay you 10 grand and it's done. They have to pay the taxes on top of that. And so their government's taken from both of us. So when you're an S Corp, when you pay yourself a salary, you pay these same things because you have to run a payroll. That is one of the rules of an S Corp. You have to run a payroll. You don't have to pay yourself a lot. It's a, how do they word it? A fair wage or something like that. My fair wage is $1,000 a month. I don't think that's probably very fair, but it's like the lowest that my accountant thinks I can get away with because you have to pay taxes on that. The other way that you pay yourself is a dividend, which is basically I take money from my S Corp and give it to myself, and I don't pay payroll tax on that. I pay income tax on me from that, but I don't pay payroll tax. So I am saving 15% when I do that as an S Corp. So that's the whole reason that you do something like this. Protection, and then you can save with taxes. But if you don't make 30 grand, your headache of running it as a business where you have to renew it and set it up and worry about things with accountant and stuff, you'll probably pay more money than you save. So if you're not going to make 30, probably don't worry about this yet. Questions?
I took a class that,
Mm-hmm.
and he said 75,000. You're not making 75,000, then it's not worth it.
I have a differing opinion for one reason. I like the separation of everything. You're probably not saving a whole lot on taxes, lower than 75, but it makes your life so much better in my mind. For example, you go and swipe a credit card, it is a business account. It's like a whole different world in my mind because this is a business expense. So I have my business credit card. I'm like, oh, I'm going to get my hair cut. This is a personal expense. And I swipe my personal account and I know like that is mine. So it is like so clean and easy for like budgeting and thinking like this is different than that. And so I think like on the lower level, that's where I want to start it.
Yeah.
But if you really want like huge tax savings and stuff, it's probably higher.
So it's not really like it's gonna hurt you if you set it up that way, even if you're not making that.
Yeah.
Because he kind of made it sound like that. So I was like, well, anyways,
Yeah.
I went to an accountant and set up, oh, I'm actually set up on a partnership. Last year, I hope I'll switch it to an S Corp this
Cool.
year. But he just made it sound like that it was a negative thing if you set it up before you reach that point. So that's good to know this.
No, not really. I mean,
What he mentioned was like the liability of it too, is like, you don't know what you're gonna make before
Yeah,
the year
exactly.
starts. And like the liability of not having an S Corp or not having an LLC is so much higher than just
Yeah.
paying the taxes or paying whatever else it is on it. Like for me, that peace of mind of like, I could make 50 to 75 grand and feel okay that I'm like, oh shiz, I have to go set this up right now. You
Yeah.
know? Like
Yeah,
you wouldn't have to do that.
That's why I was just like, I'd rather just set it up now, but he just made it sound like it was
Plan
not.
to be successful ahead of time.
Yeah, that's how I.
Yeah,
read
'cause
it
your
anyway.
alternative,
He
if
was like, just wait till you're doing this, and I'm like, what's the reasoning? Why would I wait? Why can't I just do this now? But-
well, yeah, really the difference is like, if you're not doing an S Corp, you're a sole proprietor and you pay 15% on all of the money that you give yourself. And then it's harder to do write-offs, things like that. You still can, but it's different and harder. And so this, in my mind, it's just like, it's a different world. It makes more sense. And so maybe there's not a huge tax savings, but there's not going to be like more of a tax liability because you set this up. Yeah, and then I like Jessica, set it up for success. That's what we're going to do. Questions on this? I have more pictures to draw. Sometimes I feel like I have to like read through the content to see what I should teach you, because I have so many things that I just want to teach you that aren't anything to do with what they're saying. Okay, so one of my favorite nerd books, it's called Profit First. That is not the nerdiest book that I've ever read. The nerdiest book that I've ever read is called Algorithms to Live By.
Oh my.
So interesting. So interesting. They like come up with these computer problems and then how do you apply it to your real life? I love it. One of my favorite books. But this one's called Profit First. So the whole idea here is that little chart. Where is it? Oh no. And they stole this from Profit First, by the way, is you worry about paying yourself first, right? Profit first, and then everything else comes out later. That's the whole idea of what it does, but it comes in a very systematic way and makes it really super easy for us. So what they say, money comes in, you should set up 4 accounts. Call them income, operations, tax, and profit. So what happens is you get paid a commission check. That should get deposited into your income account. You never spend any money from your income account. It is just a holding account to then pass it out to everywhere else. And then so on a fixed day of the month, maybe twice a month, once a month, whatever you can do, you have a percentage come to each of them. So like, let's say your accountant says, save 30% for taxes. And you know that you're going to spend 30% because you're going to follow that model. Then you know that you have 40% left for profit. That just happened to be the 30, 30, 40, but that's not the 30, 30, 40 we were talking here. So let's say it's on the 5th. Every 5th of the month, you distribute money to your accounts. So you put 30% into your operational, 30% into your tax savings account, and 40% into your profitability account. Then you have a card just for this operations account. You spend all the money that you want, however you want in that account for your business, right? You buy yourself a car, you fill up on gas, you get yourself a new computer, go out to lunch, whatever. That's what this money is for. You never touch your tax account. He says that you should set it off on a different bank that is very difficult to get to. His bank is 3 hours away.
Brokerage, so the brokerage will take it out for you and hold it.
Ooh, that's a great idea.
I do that with mine accounts since I started.
Yep. Novalee calls it the family reunion account.
Pain in the butt to get out.
And she will take
It's not that bad.
a certain amount or percentage, yep, right from your account and hold it at the brokerage.
So then when you pay your taxes, just go to work, say this is what I put for my
Yeah, I
taxes.
have to send an email to Sharon and Novalee and say, hey, will you put this into my bank account, and they just do a transfer. But other than that, I never see it. I don't look at it. I honestly don't know how much is in it. Most of the time, like I can track it if I want to, but 30% always comes out of every commission check.
Smart. And
Yep.
that.
Easy. And if you did more than 30%, you could probably save some for family reunion, things like that. But I like just doing that as a tax.
The only thing is I don't put more than 30 because it doesn't have an interest. Like it doesn't pay me to have it sitting there. It saves me a lot of headache.
Yeah. And let's be honest, how much are you really going to make in interest? I'm doing a remodel, so I just did a cash out refi to get ready to like spend everything. And now I can't find a stupid contractor to do the work that I want to do. So I've been sitting on my money for 2 months, 90 grand. Guess how much money I've made in interest in my high yield savings account? Ooh,
9
nope.
cents.
I've made $54 off of 90 grand. I'm like, why am I even doing this? But I guess that's the best you get now. Yeah, make your tax account difficult, whether it's at a bank that doesn't connect to your bank or I don't know. I have mine hidden, so it's easy, but I'm also weird with my money, but I hide it, so I can't even see the amount that's in that account. I just know every month I have to send the percentage same percentage every single month to that account. And then I have no idea what's in it. And I hope at the end of the year that it's more than I need, because then that's my tax refund. Because welcome to owning a business, you're probably going to write a check at the end of the year. And if you didn't, come find me and tell me what you did, because I want to know what you're doing to not have to write a check to the government. Legally, or kind of in the gray area, not illegally. So you're gonna have to write a check. So if you overfund your tax account, you get to do one of two things. You either get to leave the extra money there because then you don't have to fund it with as much, or you get yourself a tax refund at that point because you just paid yourself too much in the tax account. I usually just take it all because I like that better.
I have a different account set up on this. They're all in the same place.
Mm-hmm.
But growing up, I just the way that I was raised with money, like I can look at my numbers every single day in all of those accounts, and even my tax stuff, I never touch it. Like in my account, when me and my husband got married, is the original money that I put in there when we started, just because there are certain accounts that I just mentally know that we cannot touch. Period. And we haven't. It's
Good.
just stayed there because just the way I was raised, I like that, shove money here and there and find it once in a while because I just.
Yeah, I'm like anal with my money, crazy. Like, let's save, let's invest, let's not spend it. I probably spend too much on technology, but that's the only thing that I really care about. So I'm like, well, like, let's go out to eat. Like, let's get Little Caesars rather than Domino's. That's cheaper, kind of an idea. And I think it tastes better because it's cheaper. I can't say I like it, but I like it more than, oh yeah. Oh, that one where it's like half and half. I'm all about that lately. Anyway, my wife is not like that. My wife, like, her parents had to separate bank accounts so they didn't go bankrupt, kind of a thing, because her mother is so bad with money. Well, a couple of years ago, we were at like a book fair with my kids, and I told my oldest, he was 6 at the time, I was like, look, we will pay for half of any book, but then you have to pay the other half of it. And so he kept looking at books and he'd flip them over because the price was there. And he found one that was like on sale, and his little 6-year-old brain didn't do the math right, and he had to pay more money than he did. And he was like so upset that he spent money. And I was like, this is my proudest dad moment ever. Like, you spent money and you just got sad. Like, we're going to be okay. You're not like your mother. But he got the book and he loved it. And we had a conversation, and sometimes you have to spend more than you want to, but saving money is good too. Okay, so your profit account, how this works is he says every quarter. I'm impatient, so I do it every month. He says some people do it every year, but they're crazy. Is whatever is in that account, you get half of it at the end of the quarter. So whenever you're distributing money, whatever's in that account, half of it goes right to you as a bonus. You are a business owner, so this is your distribution. I think that's why he does it quarterly, because if you own stocks that give a distribution, they do it every quarter. So same kind of concept. So you go have a great month and you end up with 10 grand in your profit account. At the end of the quarter, you gave yourself $5,000. Now you've already saved for your taxes, so you don't have to worry about saving taxes out of that money. Like, it's truly just your money. You have your business expenses, you don't have to worry about it. Also, while you only do half the money, like let's say you give yourself $5,000 and then the next couple months you don't do so hot. In theory, you have a little bit of a slush fund there. So you don't have to be like, shoot, I have to go put some of that 5 grand back into the business so I can survive. Ideally, you never take from the profit account, but it is there if it's like you hire an assistant and you can't pay her or him. Like, you could probably steal from your profit account to go pay your employee, rather than just being like, hey, I know you've worked for the last 2 weeks, but I'm not going to write you a check because I don't have any money. They just quit on you. So that's the whole idea. Money comes in, you disperse it out systematically, and then you get to spend whatever you want from your operating account, and then distribute from your profit and pay your taxes from your taxes. Questions on this? No, I can leave this up. I think this is my last picture that I have to draw. Oh no, and you have to read my handwriting.
Seriously, I just need to go get glasses. Apparently I need to make that.
Shake it. See if it. Yeah. I take all these classes and I sit in the back and I can't read. I need glasses and I need to look good in them. So business expense. Okay, what else did we not cover here? Gain clarity on your big life. Oh, we should probably talked about this first. Like, what's your big why? Like that whole question of you're going to make $100,000, like, why? Why do you care about that? Is that just going to be like one of those things that's like, I didn't make it, who cares? Or is that going to be like, I need to make this? Like, what is your why? Why are you doing it? Because when push comes to shove, sometimes you just don't want to work. Do you know who your boss is right now? Yourself. People tend to be crappy bosses to themselves. I told my agents one time, I kind of like flipped it on them and tricked them. And I was like, hey, I'm going to hire an employee, but what do you want them to do? And they like explain all of these things that they want them to do. And I'd be like, oh, how about like your SOI? Should they call your SOI? And they're like, oh yeah. I was like, how often should they call? And they're like, for sure quarterly. Okay. Do they need to like log it, like mark it? What do they need to do? Like, what kind of reporting are you gonna have? And they like came up with all of this stuff. And I was like, you are not doing a single one of these things. I was like, you are being the worst boss of yourself. Like if you would fire an employee for treating the business how you are treating your business right now. And nothing changed. So, but I thought it was a good message. But so whatever your why is, this will help you like push and drive and grow, right? If you don't have a reason to make your next phone calls and you don't feel like making phone calls, you know what's going to happen? You're not going to make phone calls. Maybe Carl gets mad at you one day and like, hey, make your phone calls. And you're like, all right, I'm going to breakfast. Let's go hit up IHOP. Is that still a thing? All you can eat pancakes, right? So have a big why. Because if you have a big why, then it will drive you to do more. Who has a budget? Couple of you?
Sort of.
I like that.
Once a month, I pay my bills and look at what I have, but I don't plan ahead on what I'm gonna do. I just don't spend money.
Yeah. What's the saying? If you don't have a plan for your money, someone does.
My plan is don't spend it.
Usually like Facebook and Instagram has plans for people's money. Target has a lot of plans for my wife's money. Yep. That's what gets me. Stupid Apple announcements every time they're like, we have a new phone. I'm like, I try to put it off so long. I just bought like the wallet that goes to the back of your phone. Like I have one. I bought it on Amazon, which is crappy. But Apple has one with like an air tag in it, so I can track my wallet if I lose it. I've lost my wallet once in 2 years, and I just bought the stupid thing. It comes today, and I'm like, stupid Apple, just take my money. Yeah, keys, everything. I need to put them on my kids, where they are all the time. They tell you not to do that. I think it's more liability than anything. Have some sort of budget, right? This could be like down to the penny kind of budget if you are crazy and anal. Otherwise, my favorite kind of budget I've ever heard is a conscious spending plan. So be conscious of where you spend your money. For example, I am not a car person. I don't care anything about a car. I bought a new car like a year ago, and I had really one requirement from it. I wanted adaptive cruise control. That was it. I live in Riverton. I'm like 5 minutes from the freeway in Riverton. We're right off the freeway here. I am only driving on the freeway the whole time. So I wanted to get on the freeway and push a button. And when cars slow down, I slow down. When they speed up, I speed up. That was my one requirement for a car.
I really do.
Because you want to know if they're slowing down, you're moving over.
Because it slows you down, you get,
But if you
pick up
move over, you
speed,
speed
get
back up.
over. I know, but there's a delay.
Yeah.
There is a delay, and it drives me bonkers.
Yeah. I wish I could turn it off sometimes. Like,
No, I don't right there, but I don't want to slow down. I want to keep my momentum and move over. But anyways.
yeah, I don't think I would fit on the Brett Wild team. Have you seen the parking lot with all their cars? They're all about the cars, like cool cars. That's what they spend their money on. I don't care to spend money on cars ever. Like I debate about a Tesla because I don't like filling up on gas all the time. I want to just plug my car in and never have to go to a gas station. And it has self-driving, which is like a step up from adaptive cruise control. Like, done. So my conscious spending plan is don't spend money on cars. Like, that's the thing. I get a car wash maybe once a month to kind of keep it nice, but that's it. Whereas other people might be like, I'm going to spend a lot of money on cars. I'm spending a lot of money on technology, and like I'm all about like education. Like I take classes on Udemy. If you guys have ever heard that, I'm like, ooh, this seems interesting. I'm gonna go learn this. $25. Boom. It's like not even a thought in my mind because I already am okay spending for growth. So I'm okay with that. Red Sign pays for a bunch of my trainings, but if they didn't, I would pay for all of them because I like to grow and I like to learn. So I would just pay for them. Don't tell Johnny or Clay this. So they keep paying for them because I really like that they're paid. But so if you are bad at budgeting, figure out what you're going to spend your money on and what you're not. And don't be influenced by others, right? I go to lunch every single day. If you don't care about eating different lunch and just want to eat a stupid sandwich every day, do that, and don't like try to be my friend and go to lunch with me because then you'll just spend too much money. So conscious spending is a fun way to do that, and do that in your business too, right? Some people do closing gifts. I don't like them. I think it's a dumb practice personally. Other people love it. Like that's what Heather Groom, I was talking to her yesterday. She's like, my SOI is all about the gift. She buys her people gifts and she gets crazy amounts of business from it. That is not my love language. Like my birthday's next week, a week from today, by the way. Give me presents. Just kidding. I don't care about presents because lunch. Way better than a present. My mother-in-law, her love language is giving gifts. She has texted me 4 times already to ask me what I want for my birthday. Do you know what my response is? The emoji like I don't know. I don't care about stuff. I just buy it when I want it, and I don't care for you to buy me anything. But like, so gift card for lunch, easy. That's usually what she gets me. Brownies, that's what it's all about. No cakes. Yeah. Okay. Set up your business entity. We talked about entities. There's a whole bunch of different, if you want to talk to your accountant, that's probably great. By the way, I'm not an accountant. I'm making all of this up from my experiences. So if you get sued for some reason, don't blame me. Open additional banks and savings. We talked about this. By the way, I do this kind of thing for my personal life. All of my money goes into one account, and then I have a spending account, and I have a savings account, and I have an investment account. And whenever I'm like, hey, let's go buy this meme stock or whatever, I have like an investment account and I can just dump money from. Or if I'm like, let's go buy a rental, I'm saving up money from my investment account. So I do this exact same thing, but just call them a little bit different things. And my wife has her own account because she spends too much money. So we call it Swiper, Swiper, no swiping, Dora the Explorer. How are we doing on time? Great. You guys should invest in software to track your expenses. QuickBooks is my very favorite. I hear FreshBooks is good. I don't know. If you're starting to run your business like a business, you should have that, and your accountant will thank you later. If you feel like, nah, I'm not making any money, I'm too cheap, track your expenses somewhere, even if that's a spreadsheet.
Well, if you've got a different credit card for each thing, then you know that everything on that card, you just print out your statement, right?
Yep, and that makes it easy. And if you're like, I'm not gonna make 30 grand, but I still wanna keep my world a little separate, you can open up a separate credit card and only use that for your business. And then every transaction you did, that was a business expense, even though it's your personal credit card, and just keep your life separate. And might as well get some points. I'm all about the points, but no fees. That's my requirement for credit cards. Hire an accountant, CPA, attorney. I did my taxes all by myself all the way until I was in real estate. And then it is the best money that you can possibly spend because they just do it all. I just have a Google folder where I just like dump all of my tax documents that I get, like rental properties, my mortgage, my W-2, my 1099, and then I'm like, here you go. And then all of a sudden he's like, okay, I'm done. Pay me. I don't even remember what I pay him. 250, 500, something like that. And then I'm done. But
Oh, I was like, 5,500.
no, ooh.
That's like-
Definitely not, definitely not. And then talk to your CPA about estimated taxes. You can set it up to pay quarterly as well. So this tax account, you're literally every quarter write a check from that, or you move it to your operating account and write a check from that if you don't just have that in savings. Just to do your quarterly taxes if that's how your account says you should do it. And then prepare for your future. You should invest. That's why I wanted to draw the line and talk about moving money over to an LLC to buy rentals. Because we have a very bad retirement plan as being 1099 employees, known as no retirement plan. So we need to do something for retirement, and it's always hard to save and stuff. You should set up retirement accounts like IRAs, whatnot, invest into those. But if you can buy rentals, that can become your retirement, right? Get passive money now, get the appreciation. When you're ready to retire, sell them to live off of or live off of the cash flow, whatever you want to do there. So just makes sense. All right, daily success habits. What'd you guys learn? Do you have a problem if we're done early? Good. Well, because I took out a lot of the dumb stuff and we clicked through, like they're like, take 10 minutes to do this activity where it's just like, you want to make $100,000, here's all the numbers. If you guys want to do those, like they're great, make up the numbers. I even go further than that. It's like, okay, you want to make $100,000 and then that equals 56 transactions in their example. It's like, okay, well, let's run the economic model that's right out of the red book, figure out how many appointments a week that is. 2, maybe, I don't know, making up numbers now. But then you can know like, okay, if I want to make all the money, all I need to do is set 2 appointments this week. And then just do the rest of the things at an okay conversion rate. So.
What is the MRE
Chart of accounts. So that is, I should have just like logged into QuickBooks or something. So this is what your accountant will love. And when you're like, hey, this is how I want everything organized, it is the chart of accounts. So when you categorize your expenses, it's like what's where. They have a like a best practices type idea. And so if every agent uses the same categories, then it's really easy to be like, yep, I'm spending what I should. They literally have a percentage in each column. Like if you're going to sell $150,000 of GCI, like here's how much you should spend on rent, 1% or something like that. You can spend 2% on a car, 10% on marketing or whatever. I don't remember all the numbers or something like that. And it adds up to 30%, by the way, spoiler alert, 30, 30, 40. And so the chart of the accounts is like the 9 different categories and what fits into those. But you can do it however you want. If you want to just make it up, your accountant probably will. Like QuickBooks, when you log in, it comes with default categories. It's like, this is supplies and maintenance or something. This is office, so apparel, wages and salaries. And so then if you're just like, well, I want to know what am I paying like a showing assistant and what am I paying my virtual assistant, you can split those up. And the chart of account kind of does that for you. But if you find it in KW Connect, you could probably just use like Google Sheets or Excel as kind of like your money tracker if you don't want to pay for QuickBooks. It's like $50 a month. I use Mint for sure.
What's that?
So that is personal finances. You connect all your bank accounts and it tells you how much money you spent. Yeah, every month or so I get in there and just categorize everything. And then I put it into a spreadsheet to analyze how I'm going over the year and stuff.
I have this app called Easy Expense, and because I don't, everything I pay for is with my card, right?
Uh-huh.
Pay it off every month. So it just, every time there's an expense, every 3 or 4 days, I just go through and say, same thing, it's got a ton of different categories. This was gas, this was house, this was business expense, this was training material, this was. That's how we report.
I feel like the secret to money is just tracking it.
Got 4,386.33 in write-offs
Awesome.
last year.
Yeah, this one time I decided I was going to lose weight. I was like, I'm going to lose 10 pounds. I was like, I don't know what diet I want to do or anything. I was like, you know what? I'm just going to start keeping track. Let's just keep track. Everything that I eat, I put in MyFitnessPal. And I did nothing different, by the way. Like, I still ate at Taco Bell and Little Caesars and all these stupid, gross places that I shouldn't eat. Had my Mountain Dew every day. Didn't change anything. I lost 5 pounds. All I did was track what I ate. And somehow my brain equates that to like, oh, I need to be better about something. Sometimes I wouldn't eat things because I didn't want to add them to the tracker. If someone's like, oh, hey, you want a piece of candy? I'm like, no, that will be too hard. Yeah.
I don't know.
Like, how many is 3 M&Ms worth on the tracker? Like, I didn't want to do stuff like that. So there, maybe that did it. Like, I don't know.
Like,
Yep.
honestly, so I think a lot of people, even if they snack, they're not aware that it's so much more calories.
Yeah, it's like when you sit down and you eat a whole bag of chips and you're like, oh my goodness, I just ate a whole bag of chips.
Like, you know, the Ritz crackers things?
Uh-huh.
I mean, I think like serving is like 3 or something. I'm like, oh.
I thought
It's
a
not
serving
the whole
was
thing.
sleeves.
It's not the whole thing.
Yeah.
Right?
They need to make it real. Like, hey, this whole sleeve is what you're probably going to eat. So that's what we're going to tell you about.
I did good today. I love Tuesday.
Yeah.
But
Yeah.
even with, I mean, if you look at your accounts all the time, I've done this. I have a horrible habit, but I don't check my accounts. My husband does everything. And so that I freak out when I look at it and go, what the hell has happened? And it's my fault because I don't look at it daily.
Mhm.
Or monthly. I know.
Yeah.
It's excessive. I used to look at them daily though. I used to like look at them morning and night. So I knew what I spent and I was,
Maybe I just don't spend enough.
well,
Like, I'm like, maybe once a week.
it was just different. Like, I don't know, it was easier to track. There wasn't a lot coming in, but it was just a good habit because I knew, and you kind of feel accomplished when you don't spend anything too, honestly. Like you feel, you're like, yeah,
Oh, like, I
sweet.
didn't spend it.
Yeah.
Very good.
No, visually, like, you know, yeah.
Oh, see, my husband and I have separate accounts. That's a whole separate account
There you
situation.
go.
That's me.
Yeah. My wife used to ask me like, she's like, hey, tell me when I'm spending too much. I'm like, you're spending too much. She's like, ha ha ha. And I was like, no, I'm serious. You're spending too much. It's like one day after like 6 months of this, I sat her down and I was like, this is how much you're spending. She's like, what's this $150 charge? I was like, what are you talking about? This is your card that it's on. Like, it was Fabletics. Do you guys know about this? You for sure don't because it's a girl thing. Yeah, it is a subscription to
It's shiny.
It's a
yoga
workout.
pants.
It's
Oh,
workout
you send your pair of
But
pants every
you
month.
have, it's like $40 for the first, and you get like all of this stuff, and then they
It's 40
send you a
bucks pair.
shipment the next month, and it's like 200.
Yeah, and you know what happens if you don't like order anything or say that you want to receive it? They still charge you and they give you credits to your account. Do you know what happens if you try to cancel that 6 months later and get all of that money back? They say, no, spend it.
You have store credit, but that's it.
Yep. You know how many guy pieces of clothing they have on that website? 3. And I own all of them. She's like, no wonder you were saying I was spending too much. I was like, yeah, you were spending $150 on yoga pants that I had never seen before. And so, yeah, just keeping track of your money is like a game changer with where you're spending it. The other thing that I do I haven't done as much in my life because I try to just not have as many subscriptions. Randomly, I'll do it with like our TV subscriptions because that gets out of control. Like my kids are like, let's do Paramount Plus to watch the Paw Patrol movie. And I'm like, oh, cancel. But I will just randomly cancel things like on our team. That is like a common practice for me. I'm like, let's just cancel this subscription. Let's just cancel this whole credit card and see what happens. And if people don't complain about it, I don't buy it again. It's a great way to save money.
I
Okay.
like to pay everything yearly as much as I can.
Ooh,
Like-
pay yearly.
Yeah, just pay it once and be done.
I know people that are like that.
I hate, like, I just went, that's what I just did this month, is I went through everything that we had. And I was like, if I can pay it yearly, then when I have the money to do it, then I'll do it. So especially on the little, like, like Netflix and Hulu and all those stupid things, I was like, man, it could save me. Let's cancel a couple of them. I combined the two together and paid it yearly.
That sounds so nice. So there's this practice called Kronk. It is keep, replace, offset, cancel. Kronk. And it's like a practice. So you would print out like your credit card statement and literally write a letter next to it. Are you going to keep? Can you replace this with something else? Or are you going to offset the cost or cancel it altogether? And I have done this a whole bunch. Like my internet, I was paying $85 for internet and I hated it. And so I went to their website to get their phone number to say, hey, I pay too much money, give me faster internet. And on the front page was an advertisement for faster internet than I had for $55. And so I called them and I was like, I want that. And they're like, oh no, that's for new customers. I was like, okay, well, I'm going to be an ex-customer then.
Be. Close my account.
Yeah, because I've been paying $85 for 2.5 years and I have worse internet than your new people. So give me better internet for this price. And they said, okay. And that happens all the time. I know people that do that like every year. They'll call all their different providers and get cheaper rates for everything. Yeah. So Kronk your expenses. What else?
I just
Let's keep talking about money.
I got a free budget discount for personal, and I don't think that I always check my bank account, like it's daily, sometimes twice a day. I'm always on there checking it. And at one point it was like, okay, writing it down makes me realize how much we're spending, but then you get kind of complacent to that. And so I was like, I'm just gonna collect the receipts this month and just see what we're doing. We're getting to the end of the month and I'm like, how many more days are to keep collecting receipts? Because it's getting big. There's a big pile and I'm like, oh, I don't want to add these up. It makes me nervous. I mean, even though I've already gone through and done it on my bank account already, to add those up, I'm like, oh, I don't know if I want to.
You just got to trick yourself into not spending.
Yeah.
I've been debating. Maybe you guys have something like this. I don't know how to really ask this question though. But I want to put it out on, I don't know, something where someone comments, not my Facebook page because I never post anything, but like I've been trying to find like a product that I have bought that like a year later, I'm like, I am so happy I own this product because it has been like a game changer. I feel like everything I buy, it's just like, yeah, it's basically the same. I make fun of Jessica for her old phone. You know what? It does everything that my new phone does. Maybe my pictures are a little bit better, but that's it. Yeah. Yeah. So I'm trying to think like, what have I bought that like a year later, I'm like, this has changed my life for the better. And I can't really think of anything because nothing really changes your life at all.
My purple sheets.
Oh, those are game changers. Oh my goodness.
I love this one. They don't last forever, but I really keep them.
Yeah, my wife would say Betty's. That's probably the one thing that she would say.
Yeah, they do.
Betty's. They're a bed that zip up. It's the only way I make the bed. I make the bed all the time now because it's just a zipper. Yeah. Yeah. I told her no for years and years and years. And then what did I buy? I bought something that was like $400 and she's like, I'm buying one for our bed. And I was like, no, that's not how money works. Just because I spend money doesn't mean you should spend money. But whatever. Yeah. Yeah. In her mind, that's how it works. Yeah. Yeah. If we were together, we'd never spend a dime. If they were together, they would be broke.
Spouses would spend all the money.
Yep.
They'd be broke as a joke.
Mm.
I am more spending. But I'm still in the one that doesn't. The last thing I know, not spending money.
But in your business, you guys are 100% in charge. So whatever you are going to spend, it's all up to you. So don't go crazy.
Unless you hire somebody. Like, no.
Yep. Yeah. Johnny, he makes money, but he spends money like crazy. And so Novally is the one that like tracks crazy amounts there. I also track him on our team side of everything that he's spending. He usually isn't too crazy on the team. I think it's more the brokerage. But yeah,
How much
set up
do
your
you
systems.
Save in for investments?
What do I save for investments? I've been all over. I've been doing at least 10%, but I try to do a lot higher. And then my credit card bill started not being paid off at the end of the month. And so I was like, okay, I can't do that. And so then I did like 5% for a while, but
And I think that's what, like, in the CEO, Think Like a CEO podcast, that's what Gary Killen was, to adjust those, but just make sure they're not zero.
yeah,
But you can adjust them when, because things are gonna happen in your life that you don't plan for,
Yeah.
essentially, right? So you kind of, and you have to know the areas that you can be adjustable in and then get back to it, right? So.
oh, I forgot to mention the most important thing of this class. Call your contacts. That's the most important financial decision you can make. Is call your database. Because if you don't call them, then you can't make any money and you won't have any money to spend. And then it's like, why did we even do this thing?
Thank you so much.
Thanks, guys. Bye if you're on Zoom.